financial services is going to be disrupted.
Now, I was really motivated around not killing the banks, but completely disintermediating the banks.
I think the banks are scared. They're too big to self-disrupt. Consumers only go to the banks because they don't have any other options. But with Fintech, there are other options which are more efficient and more accessible.
Fintech is not global.
Your payments is very fragmented.
Markets are different, and we have to admit that each country may require different kind of steps to reach the nirvana.
The thing where you would have a lot of value would be highlighting
what would India need, or what would China need, what would Indonesia need.
India is amazing. They have very good engineering talent, very good understanding of tech, have a huge population that is unbanked, so good consumer products can be served there.
India's story is actually a very interesting one because which is by far the biggest population that is still unbanked. Only 30 million are getting access to credit from the banks.
So the biggest problem for India today is that we cannot mobilize savings of the unbanked people. Savings is the key for financial inclusion.
People wants to send money through the banking channel. There is an AML guideline of the central bank here in India where the bank says that we need to have a full KYC. What is the problem that when the person is migrated here for the livelihood in India, he don't have a full KYC. So he don't have a proper residence proof. And because he don't have the residence proof, he cannot open the bank account, and so as he can't use the banking channel.
I'm very bullish about Myanmar, which is obviously just opened up.
We have 3 products. One is top up. Number 2 is remittance. And number 3 is bill payment. We are doing for the people of Myanmar to serve the easy financial services.
Japan is a special case, I think.
Peer-to-peer platforms in Tokyo tend to invest outside of Japan because the interest rate in Japan is so low.
BOJ introduced negative interest rate last week.
There's so much liquidity in the system that banks actually pay you to invest money.
In Japan, they have too much deposit and struggling to find places to lend money. So what we try to do is to raise deposit in Japan and then lend money in the UK. Actually, Japanese personal investors prefer higher risk, higher return investment opportunities rather than lower risk, lower return investment opportunities. Risk appetite is quite high.
Yeah. Okay. It's a form of investment because inside Japan, there is no place to invest on anymore because the interest rate is really low. The economy is not growing, so they can look for somewhere else to invest on.
We decided to go to overseas market, Peru in Latin America. Eastern European markets like Estonia, Latvia, Lithuania, Georgia.
The bulk of M&A are coming from the Japanese corporation. The biggest M&A in Singapore was done by Rakuten.
Rakuten Fintech Fund not only just invest in Japan but also abroad. The largest difference is that compared to the US or the UK, banks are very friendly to Japan.
We would like to incorporate those fintech startups into Japanese market. There will be a big potential for fintech startups.
In Japan, for the banks to provide an app, it's very regulation heavy.
Japanese companies very specialized, build services, user-friendly, customer-centric service. That will be a differentiator.
We still need more number of people to succeed.
It's a matter of culture, I think. I think it's just a beginning at this moment.
China is different. China is insane because it has a huge market. So a simple innovation seems amazingly big because it just has a massive market.
There were $2 billion plus funding rounds in China, JD.com and Lu.com.
Yeah.
The deals are getting bigger, a lot more investment from corporates.
I'm not sure if it makes sense for an entrepreneur to access China through Singapore or Hong Kong. It doesn't make sense. You should go directly to China. It's very difficult for a foreign entrepreneur to compete in China. Yeah, because the Chinese entrepreneurs will really eat you up. They know their space well. They are locals. 9 out of 10 Asian startups, right, are clones or what have been done in Europe or US, there are very few original AI ideas.
China has a capacity of trialing innovation like nowhere else in the world you can, because data privacy law regime is totally different. Why hasn't Amazon become Alibaba? The answer, odds are, privacy law.
The M&S announced this $2 to $5 million fund. So very big money.
200 Indian startups coming to Singapore to raise funds because of this reason. Innovation labs, you have now 10 or 15 in Singapore, are a good way to do something, but at the same time I think it's almost too much and too many. People came to Singapore to say, oh, this money's there, startups called me, Marcus, can we get this money? No, you can't. It is for the incumbents. M&S can't fund startups, full stop. I see a lot of startups coming from China. They don't go to Hong Kong. They go to Singapore. I see Australian startups coming to Singapore. TransferWise, a lot of UK, Canadian and American startups coming to Singapore to enter the region there.
Singapore is a place where you can prove your model, prove your team, prove your product, and then take it to lucrative markets like India, Indonesia, Philippines, China, the US. Because Singapore itself, the population is small.
Yeah, I mean, even if you do well in Singapore, it's only 5 million population. It's like a non-market.
If you say, I'm in Singapore now, so yeah, great, but how do you get to Malaysia? You almost have to build a completely new product, completely new team, completely new company, very different ownership, very different investors group.
So it's tough to really build a scalable business. It's a conducive environment to innovate, but you should go look elsewhere to build a scalable business.
Sydney, though it's a part of Asia, it's still Australasia, right? It's like a West meets East. So Sydney provides that, whereas if you go to Silicon Valley or London, it's a very Western world.
Lots of fintechs globally, looking at Australia as a good test market. It's contained. It's highly mature. We are really early adopters of technology. We've got a very high level of wealth. Anything that makes their life easier and more enjoyable, people will jump at.
Australia has a huge opportunity. We've got the 4 biggest retail banks in the world.
Banks have distribution, so you go, gosh, I just need to work with the biggest guy, and you get 40% of everyone in Australia that banks with that bank.
There's already probably, we're guessing, maybe 300 to 400 fintech startups in Australia. And it's really just still the beginning of the wave. Wealth management's a big one, because the super and wealth management industry is very advanced here.
Cash flow, that's the opportunity.
And what we do is we create an automated budget for someone.
And also the alternative finance, so peer-to-peer and balance sheet, non-bank lending. And there's also a very mature SME market here that is, really hungry for debt finance.
And in Australia, in 2015, there was around 450 million Aussie dollar terms that had been raised through alternative finance platforms. 70-75% of that actually relates to small to medium enterprise seeking to find alternate sources of capital and finance.
So there's a huge shortage of capital for startups in Australia.
Finding VC money here is tough.
We've had this issue where for the last 15-20 years, we've had a huge mining boom. So there's been no incentive, no imperative to invest in smart stuff, and also risk appetite.
I believe Australia will be someone creating a lot more on insurance. Insurance working with wealth management together to create something new.
I think there's also this question of role models and those serial entrepreneurs and, the successes of, Atlassian, Seek.com. Tyro raised $100 million. And Australia is actually growing at a rate which is faster than the UK and the US, observed in similar times in their maturing of their market.
We're really moving really, really well.